Welcome back to another episode of the Equity Mates Summer Series. This is a podcast where we explore everything that is possible in the world of investing. If you've just joined us for the first time, a huge welcome to the community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. We are officially halfway through our summer series for 2024-2025. We've spoken to 6 great experts, advisors, fund managers, on everything they've learned in their careers, how they would start investing today. We've drawn out heaps of actionable insights. But the best news is we're only halfway through.
Wow.
Because over the next 3 weeks, we've got another 6 great experts. If it's possible, they might be even better. And the actionable insights will keep on rolling, all to help us make 2025 our best financial year yet.
That's right. We'll certainly be starting 2025 with a bang. But we're closing 2024 with a bang as well, with Catriona Burns joining us all the way from New York. Catriona is the lead portfolio manager at Wilson Asset Management Global Fund. She has more than 20 years global and Australian investment experience. She actually began her career at Wilson Asset Management in 2003 before she relocated to London to work with Hunter Hall Investment Management. From there, she went and worked underneath John Sevior and David Cooper at Airlie Funds Management, which is a highly regarded fund here in Australia as well, before returning to WAM in 2018, where she has been since. So plenty of experience for us to draw on in this interview.
Yeah. Now, the first time we spoke to Catriona on Equity Mates Investing Podcast, we spoke to her about the alternative ways to play the AI thematic.
Yeah.
Like obviously everyone starts with NVIDIA. You know, they might want to do a picks and shovels play and invest in like a super micro computer. They might try and do the hyperscalers, the Amazons and the Microsofts. They might want to do the data center builders like Goodman Group. They're kind of the main ways that people are thinking about playing this thematic. Catriona came with like a long list of alternative ways to think about who could be AI winners. And it was just a really interesting conversation. So we've loved speaking to Catriona and hearing where she's investing and where she is finding interesting sort of pockets of the market to research. And of course, that's how we wanted to start this conversation, with some of those questions. And as always, we got some really interesting companies out of it. So that's a good start to the interview.
It is a great start to the interview.
Let alone what comes next.
Well, I mean, yes, great start to the interview. Now, before we jump into that, we should say a huge thank you to Viola Private Wealth for supporting this series. Viola Private Wealth specializes in bespoke financial strategies with expertise in managing alternative investments like private equity and real estate. As managers of over $2.5 billion in assets, they help individuals and families unlock the potential of illiquid assets, adding stability and growth to their portfolios while still holding high-quality, diverse portfolios of equities.
Yeah, Charlie Viola has been a big supporter of us here at Equity Mates.
Yeah.
Viola Private Wealth has been a big supporter and is trusted by a number of members of the Equity Mates community who are clients, or people like Bryce and I who aspirationally one day hope to be clients.
Yes.
But look, Viola Private Wealth has helped individuals grow and protect their wealth. To learn more, visit violaprivatewealth.com.au. But Bryce, with that said, let's get to our conversation with Catriona Burns.
Well, Catriona, welcome to Equity Mates.
Thank you for having me.
So investing is a lifelong journey. No matter how experienced you are, there's always something to improve or to discover. With that in mind, what are you working on right now?
So true. And I think that's one of the really great privileges of doing this job. You are always learning and always being challenged to think differently, absorb information faster whilst trying to think further ahead. And so one of the things that I think I'm working on, and I think us, the team at WAM Global are working on, is just understanding the market composition these days versus the past. And, that composition of passive funds, algorithmic traders, CTAs, really is very different to history. And so that is having an effect on markets, on volatility. And so what we're, in terms of adapting, I guess, our process to the reality of what the market is today, for us, it's really like, how can we take advantage of this new composition of the market? And we do see massive opportunities because particularly say the algorithmic traders, like they literally are searching for beat and miss on a result. And you're seeing share prices consistently over quarter, when the quarterly results come out, get whacked very often 20% sort of thing. And these can be great businesses, and it's a small miss and the stock's down, that much. And so what we're trying to do is, where we really believe in a company and really think that, this small miss might be, very much, not damaging to the long-term thesis, we want to take advantage of that. And so I think that's a learning that I've had, and, that I'm trying to implement across the team and discuss with the team. The market composition may be different, but we can learn from that and adapt to that and actually take advantage, because these funds are very, often trading days, not thinking years. And so if we can focus on the fundamentals and believing, recognizing that these businesses, often there's no fundamental thesis break and it is just an opportunity, then we think we can actually take advantage of that.
So Catriona, last time we had you on the podcast, you outlined how you were really interested in the AI thematic, but there were a number of different ways that you were looking at investing in it outside the sort of core technology players. And it was a fascinating conversation. We'll include the link in the show notes for people who haven't listened to it. But, fast forward to today, are there any areas of the market or any thematics or anything that you're particularly finding interesting or appealing at the moment?
Yeah, so there are actually lots of areas that we think are still really appealing. And for us, we've identified a number of these longer term structural winning areas like innovative health, electronic marketplaces, critical assets, digital enterprise. And we've got lots of holdings within each of those kind of buckets. We think those growth stories are really multi-year in nature. And, there's lots of noise around, whether it's elections or macro uncertainty. Are we having a recession? Are we not? But because of these thematics are, much more structural in nature, we're really happy to buy into noise and short-term concern around any of these factors, because we think it's just, often in, decades long in structural in runway for these stocks. And say an example I'd give you there is something like TradeWeb, which, equity markets have been electronified, for many years. And, you basically, you've got New York Stock Exchange and NASDAQ 100% electronified. But in fixed income markets, which, are the largest security markets in the world and actually bigger than equity markets, they're far behind in terms of electronifying. So that'd be a great example where I don't care if there's going to be a recession next year or not. I don't care what election's coming up. That trend to electronifying fixed income markets, I think, will play out, over the next decade. And so, you've got an opportunity to invest now in a market that, you're pretty certain over the structural, tailwind, and you can kind of look through the noise. And so we've got a number of these stocks in the portfolio where, we're happy to buy into short-term noise and dislocation because we do believe in that long-term runway.
Are there any areas of the market on the other side that are really ringing alarm bells at the moment and you're just staying clear of?
Look, I'd say one of the areas and it's the topic you brought up that we talked about last time that has, caused a lot of, massive run up in certain stocks, and that's that AI thematic. And if you looked at last year, it was just like buy anything that mentions AI in a call and says it's beneficial to their business and blah, 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 without actually having any revenue, any earnings to do with AI. Sure, we have a pipe dream of developing a business or whatever. So we think there were lots of examples of that kind of, you really in the last year have had to kind of sort out, and even today, still sorting out what are the companies that actually on a 10-year basis will be real winners from AI. And so, like even things like Supermicro, which was the, stock of the day in terms of AI, sure, it might have a great server business, but did it deserve to go, from a 2 billion market cap to a 50 bill? And then now it's back down to a 15? Like it's these run-ups, without the earnings coming through, are just enormous and more thematically driven rather than reality. And so fundamentals, eventually come to the fore. It's just that in the meantime, you can see these enormous run-ups. And so for us, that was alarm bells, like don't just buy anything because it's mentioning AI, because it says it's going to be a beneficiary, but perhaps, isn't actually generating anything today. So that's probably one of the areas where massive opportunity, but also massive amount of pretenders.
Yeah, yeah. Well, that task of separating true opportunities, true long-term structural shifts from the pretenders is one of the things that we're really fascinated to unpack with everyone we speak to in this series, because the challenge for investors is that you need to, well, one, you need to keep on top of the day-to-day noise, but two, you need to develop a level of domain expertise in all these different fields where you're not an expert to then make investment decisions. Is this a real business? Is this a real long-term opportunity? So how do you go about that, upskilling yourself and educating yourself on all these different industries and all these different technologies to then make investment decisions on the back of that?
Yeah, great question. And I think it's one of the things I think is the best about this job. You never do stop learning, and you're never, not challenged to keep learning about new areas and new things. And I think for me, I'm a very naturally curious person. Like, I would be, my friends might call me a pest because I'm always asking them questions and bothering it, whether it's like on the weekend at a barbecue, like just asking, trying to find out, absorb more information wherever I, go. And I'm a prolific questioner, and I love, whether that's your peers, younger colleagues who are more on top of like up and coming trends, competitors, friends in completely different industries, or turning up in a city and asking the taxi drivers and the Uber drivers, what's happening in the local economy, what cost of living pressures are there. I think I'm always trying to absorb, more information. So that's that kind of general absorbing of information and trends and so forth. Then there's the diving into the detail, whether that's, doing courses, going to conferences, listening to podcasts, reading books, that's constant. And then, I have done, like, in terms of actually, my team and so forth and managing them better, it's about, I've done various courses at places like Columbia and Wharton and stuff. So that's about upskilling myself. But yeah, I think there's one of the great things, but also the challenges of life today is there is just so much information, and you got to work out what is useful, who are the real experts in these new domains, and who is worth learning from and who is not. So I think there's a lot of sorting that you have to do as well on that front.
So Catriona, we want to go back to the early days and the very beginning of your investing journey. What was your intro to investing?
So my personal introduction actually came through my grandmother. So my grandparents lived on a rural property in regional New South Wales, and every holidays would go to the property, and my grandfather would be out every morning on the, at the farm, where there was sheep and cattle, and my grandmother would be at the breakfast table checking her share prices. For her newspaper would arrive every day, and she would check the share prices of all her stocks every morning. So I would sit at the breakfast table going, what are you doing? And what are your stock? And like trying to understand, what is a stock? Like, it's a company. And she had this like thing around, like, she'd always invest in things that people needed. So she owned like Woolworths. She owned very blue chip Aussie stocks. And then actually her mother owned international stocks, which was, for the time,
wow,
like, that was my great grandmother, very, like, that was, something that wasn't, particularly common. So that was kind of the intro personally as a child. And then at school, I had this amazing, in 10th grade, a amazing business studies teacher who helped me understand, businesses and what drivers of businesses and, very basic concepts. But I was like, oh, this is really interesting. And it meant I was like, oh, I'm going to do a commerce degree. So I did commerce liberal studies, which was, commerce with any arts, any science. And then lastly, I was super privileged that in my last year of university, I did some work experience at Wilson Asset Management, and went away. Had been saving money to go on a holiday after finishing university. And while I was away, having done this work experience, got a call from Matthew Kidman offering me a role at WAM. And so that was just an amazing opportunity from my perspective, because at the time WAM was, 4 people and, tiny, and Jeff and Matthew were every day seeing CEOs, CFOs. They took me to everything they, went to. It was a quite small industry in some ways at the time, where they were friends with all the other fund managers. So every Friday it was like all the fund managers, like various small mid-cap Aussie fund managers, they'd all meet in this cafe under our office, and they'd all, people like Para, John Abernathy and stuff, and they'd take me to those meetings. So it was just an enormous like privilege and gift to be giving that opportunity at 20, 21 years of age or whatever. So yeah, that was kind of my introduction to the industry and investing.
I love that. Every stage of that journey, like learning it from your family. So many Australians don't have that because their family don't learn, and then learning it in school is a big thing that we would love to see. More of it in school, and then that early career education. It's pretty amazing that you joined WAM when it was 4 people, I think you said, and now I assume it's 100 or 100 plus. It's pretty amazing journey that you've been on. Thinking back to those early days, either at the cafe or around the breakfast table with your grandma, were there any lessons that you learnt about money and investing that you still hold on to today?
Yeah, so I mean that first learning from my grandma of I invest in things that people need. Like I think that is actually a great, so she had things like literally Woolworths, BHP and Rio, like the very blue chip stuff. But she was like, people will always need, iron ore for building houses and so much. People will always need food, and like that's a nice so that's kind of grounding. And then I guess those, particularly with Jeff and Matthew, it was really getting to understand a business's industry, like those really the investment process that we still have today, like which is like industry position, the quality of the management team, the earnings growth potential, valuation, and a catalyst. Like that has not changed in 20 plus years, and that was really fundamental to me in terms of learning about, because it's one thing to understand a business, but then to apply valuation and catalyst and when to buy stocks, and that was really foundational for me. And then I think the other thing is the relationships with management teams. I think that was a real privilege, getting to at that young age go along to all these meetings with every management team of the small mid space in Australia. I think what was different and great about how Jeff and Matthew kind of approached it versus what I see some fund managers do today is that they are very respectful of these managers, of these CEOs and CFOs running the business. Like I'm amazed sometimes when I sit in meetings with other fund managers how rude they are to these like management teams, and just how they're not trying to build a relationship and respect these people. They're just trying to drill them to try and get the next number out of them, which is never a great strategy in my mind. And I think building relationships, being able to because often there are tough times when a company's downgrading and missing expectations, but if you can build trust and rapport and understand that it is not an easy thing running a business and no one's going to get it all right. But if you can be respectful and build a relationship so that even if you don't own the stock, you can still be respectful and try to learn, and you're trying to make decisions based on the conversations you're having. So I think that was a real gift that I learned very early on from Jeff and Matthew.
So Catriona, you mentioned a few things there around finding a catalyst and quality of management and a few other characteristics that make up your investment framework. How would you describe your investing philosophy though?
Look, I think personally, in terms of my philosophy and how I invest, it is actually just as we do like across the fund, because I don't now buy stocks outside owning the WAM funds and WAM Global, because I think I absorb all my energy goes into finding stocks for the fund. And so it really is about investing in businesses I can understand, which I think have advantaged industry structures, ideally multi-year growth runways, and where I really do believe in the management team and their ability to deliver. And then I think personally, I guess in terms of my philosophy, I do think that it's really important, like as I said, with that you're constantly learning. And I think it's really important to accept that what you don't know and that you will get things wrong, and to adapt if the thesis you have when you invest is not playing out. And so in that case, sell it. You don't have to hold, like ideally you hold things for many years, but if the thesis is broken and you can admit that you've got things wrong, then I think you can save a lot of money for investors and yourself.
When you think about your journey in the industry, like, has that philosophy and investing approach changed over time? Did you have any views on how you made money as an investor that you've since realized perhaps weren't as thorough or as correct as you first thought?
Definitely. Yeah, like, I mean, some of the stuff, like, very early days in it when I would invest directly was, very specky small cap names that with very little due diligence and so forth. And this was like personally, not in the fund, but it was with, very little due diligence and so forth. And I think that has, immeasurably changed now compared to the work, I do before I invested a stock. And I think one of the beauties of when I moved to London and started doing global stocks, I was just amazed at the quality of businesses that you can, find globally, and like global leader in this, this area I've never even heard of. Like, it's just it's so massive, the pool of companies and the quality of companies, like the leader in these, like, I don't know, I think I had this German, this robotics paint company, that's listed on the German Stock Exchange, that, through the GFC we invested in, because nobody thought cars were, no one was ever going to buy a car again. And they were the number one in the automatic painting, the robots that paint cars that come off a production line. And like, who'd ever heard of that company? Like, but, it came up, it was trading at less than the value of the property on its book. Like, wow. The factory was worth more than the entire company. So you're getting the company for free. And they were the 40% global market share in paints, like robotic paint systems. And you're like, okay, this is actually a steal. So I guess that was one of the things that amazed me when I went from just doing Australia to looking globally, was just the quality of companies you could invest in. And so I think now probably what has evolved from those early days is just the quality of company, like my focus on quality, and probably also identifying what is a trade versus a long-term, investment, and really being willing to hold something for the long term if you think the quality's there and the long-term structural drivers are intact.
Well, Catriona, speaking of long-term, if you had to set up a retail investor's portfolio for the next 30 years, how would you invest it? And you can be as specific as you like and list out 20 companies that are in the portfolio, or you could take a principles-based approach. We don't mind, but yeah, if you were to try and set something up for, an early 20s or whoever for the next 30 years, how would you approach that?
Well, I'd just give you my top 20 and say go for it.
Nice. Should caveat, not in your own fund.
No, look, I would do high quality, undervalued growth businesses. So like things where I see those like stuff like Tradeweb, where I see multi-year, 10 plus years, like decade of growth. Tailwinds exist regardless of short-term noise. Compounding really is your friend. So, particularly in a retail investor's long-term, 30-year portfolio, you want to buy stocks that you don't care about. Like, you don't think, no cyclical name you'd really want to own, because you're going to have many cycles and they often tend to trade well and then go straight back to where they've come from. So, yeah, I'd buy those multi-year, long-term structural winners that aren't trading at insane valuations. So kind of the stocks that we look for.
You make it sound so easy, Catriona. Yeah. The challenge is finding them. So I think we want to turn to some lessons for the audience. We know that this is a time of year when a lot of new investors come into markets. A lot of people make their New Year's resolution to get on top of their money and start investing. So hopefully some of these lessons can help, set them on their journey, or for people who have been listening for a while, continue on their journey. So I think if we start short term and then we get long term, the last 12 months have been pretty wild. We came off 18 months of doom and gloom and rising interest rates and high inflation and markets falling. And the market turned, and the ASX is up like 20% in 12 months. The S&P 500 is up 40% in 12 months. It's been a roller coaster ride. What have you learnt in that time about markets and investing?
I've really learnt that it only pays to focus on earnings, not noise. So we've literally, as you said, been sitting here. It's been a crazy 12 months, even crazy 3 years, crazy even since COVID, crazy. You've had supply chains shutting down, recession coming, not coming, not coming, wars, inflation, just in interest rate rises, as you said. Like, it's big. If you listed all the things, you'd be like, wow, that's like an insane list of things. But then you look at the market and it's all-time highs. So, like, to me, and even global economies, when you look at the actual underlying performance, US incredibly resilient, Europe, sure, a bit of lower growth, but pretty resilient, Japan pretty resilient. Probably China's the only market that's been a real mess in terms of the actual underlying economy. If I had to say what have I learned in the more short term, is really just focus on earnings, not noise. There will always be noise. How would the media sell, papers and ads on online portals if there wasn't noise? But if you focus on earnings and don't overpay for those earnings, then you should do really well over time.
Now, if you can go back to day one at Wilson when you just accepted the job, what's one lesson that you would teach yourself?
Always be curious, never get arrogant or complacent, or the market will make a complete fool of you. And do react and change course, though, if the thesis is broken.
Yeah. And then a final question. There's so much conventional wisdom in markets, so many sayings that you learn as young investors or novice investors. Are there any bits of conventional wisdom that you think are wrong and should be ignored?
Yep. Volatility equals risk. So we're of the view that risk is permanent loss of capital and deterioration of like business fundamentals. And as discussed earlier, we are seeing more volatile share prices, reactions to earnings, etc. But we don't think that means that stocks are becoming riskier. We think that the volatility, and it isn't necessarily reflective of more risk in markets. It's just that the composition often of the market has changed, and that volatility can be a massive opportunity and can actually be a competitive edge if you are willing to step into what you see as high quality businesses where the price has gotten cheaper but the fundamentals haven't deteriorated.
Great way to finish, Catriona. As always, it's a pleasure to chat with you. Thank you for taking the time all the way from New York. We really do appreciate it.
Thanks, guys.
So before we go, we want to say a massive thank you to Viola Private Wealth for sponsoring this series and helping us keep all of our content accessible and free. Illiquid investments require both insight and careful planning. Viola Private Wealth's proven expertise and personalized strategies empower clients to maximize the potential of these assets within their broader portfolio. For more information, head to violaprivatewealth.com.au.
Now stick with us, because in the next episode we're interviewing Chris Weldon, who is now a private investor and investing in some pretty interesting things. He's gone.
How vague.
How vague.
Enticing. So make sure you're subscribed wherever you listen or watch Equity Mates to find out what interesting things Chris is investing in the next episode.
Can't reveal much more.